right, let's talk about this whole new tax regime versus old tax regime question. Budget 2023 introduced several changes to the new income tax regime. So essentially, the number of slabs have been reduced, the tax amount has also been tweaked, and the idea is to make the new tax regime more attractive to taxpayers. The old tax regime with exemptions, is that now better for you, or the new one with lower slabs? The numbers are on your screen. The new tax regime may look like it has lower tax rates, but is it actually a better option if you have home loans and tax saving investments? That's what we're discussing today with our panel of experts. Is it also a good idea for you at a bracket where you are earning more than 10 lakh rupees a year? That's essentially the question. To speak on this, I'm joined today by Arnav Pandya, founder of Money Edu School, and Saraswati Kasturi Rangan, partner at Deloitte. Welcome to both of you, and thank you so much for speaking with us. Ms. Kasturi Rangan, let me begin with your take on the new tax regime and the old tax regime. We have asked the question, is it new tax in an old bottle? Because the idea was to make it much more attractive than the first version, which was launched in 2020. Do you think it has effectively done that?
Well, it has made it more attractive. The finance minister has made it more attractive than what it was for the past couple of years. But as you rightly said, the question still remains, is it still better than the existing regular tax regime? I would say for those at the highest bracket, earning over 5 crores, and I know we are talking about a very low number of people there, but for the HNIs, clearly the new tax regime is being made more attractive because the surcharge under the regular tax regime at above 5 crores continues to be at 37%, whereas under the new tax regime, it's been slashed to 25%. So the maximum marginal rate there clearly dips from 42.74 to 39. So that is one population who's going to find this clearly attractive, because at that level, probably you don't even take an HRA benefit, and you would possibly have the ATC of 1.5 lakhs, maybe an NPS of 50,000, and also the housing loan, if at all. So the taxes on 4 lakhs are definitely not going to give you the kind of benefit that this 3%, 3 and odd percent dip is going to be there. But when you look at the others, say up to 7 lakh, definitely if you are earning income up to 7.5 lakh, clearly the new income tax regime takes the cake because you have the new rebate. But the other categories, and you correctly talked about it, at 10 lakhs, maybe at 15 lakhs, and so on, individuals do have provident fund contributions, LIC contributions, they would have HRA costs which are incurred, and all of this are not available under the new tax regime. The only equalization that has been made is the standard deduction, which was earlier not available under the new tax regime, and that has been brought in now. So clearly, you do still have to do a math, more so because now the default is the new tax regime. So when you pick up your tax return, earlier you had to choose to come under the new tax regime, whereas now by default you're in the new tax regime, and you would have to do your math, make sure you pull out all your documents and check out whether the old tax regime is still beneficial, which possibly it could be if you have ATC and
you need to do the
no even
math.
deductions in the HR.
Right. You need to do the math. It's going to depend on various factors, how much you earn, whether you're a salaried employee or you're not a salaried employee. It will depend even on what kind of investments you want to make or are ready to make, where you are in life. Do you want to buy a house? Do you have a home loan, etc., etc.? But all in all, Arnav Pandya, if I put it very simply and break it down for the purpose of brevity, and with the caveat that it's an individual answer at the end of the day, below 7 lakhs and above 5 crores, new tax regime is better. Everyone else in the middle, old tax regime is better if you can take the full value of exemptions. Is that the simplest way to understand?
Yes. So you can say that for very low income people who are above the taxable bracket, just above the taxable bracket, and those who are in the top bracket, which is above 5 crores, the decision is very simple because of the fact that the math clearly shows this. Now, if you want to see the figure for any other person, my thing is that you should look at the kind of deductions that a person is taking, because the whatever might be the level of income, any person who under the current regime is maximizing all the deductions, which is that if you are taking the full 2 lakh housing loan interest deduction, you are taking the full ATC section ATC 1,50,000 deduction plus the 50,000 deduction from the NPS plus the medical insurance deduction, and obviously you get 10,000 as a deduction for the interest which you earn on your savings bank account. If you are maximizing this, then virtually the old tax regime becomes a better alternative, because of the fact that the change in rates, the lower rates in the new tax regime, are not enough to overcome this large amount of benefit. Otherwise, if, for example, you are just taking, say, a Section 80C benefit and some slight small amount of medical insurance, now that low amount of deduction today will make the newer tax regime attractive. So the key point is, look at how many deductions you are claiming today, and that is going to be the main determinant for the entire middle income group of people, stretching right up to 5 crores.
Middle group, this sort of band that I talked about, Arnav, is that sitting about right? Anyone
Yes,
above 7 lakhs up to 5 crores.
yes, so that is in a way right. The only thing is that, see, if you had, say, in an income of 7 lakh earlier, but you still managed to invest 2 lakhs, 1,50,000, say, in Section ATC deductions plus 50,000 in NPS, then under the old system also you were at zero tax. The only difference is that now under the new system, without investing, you are at zero, which means that you have 2 lakh of extra money in your hand, which
Okay,
you
let's speak practically. If someone earning 7 lakh rupees, do they have the bandwidth right now to invest 2 lakh rupees? They don't.
no,
No
which
one is
is
going to, invest that much of your income. You start taking the actual benefit of these exemptions when you make significantly more money, practically speaking.
no. So 7 lakhs is obviously you will not go to 2 lakhs.
Yeah.
That is the thing, but it is more likely that somehow or the other, even if you are not making other investments, you will make 1,50,000 of Section ATC, which includes your provident fund, and maybe you will put some amounts in insurance policies and some ELSS funds, and you will have some amount of say medical insurance. So you are not at 2 lakhs, but you are slightly there. So there is a benefit even for those below 7 lakh in the new regime. But one should not take the 7 lakh as a sacrosanct figure, but that on a whole, you can say that below 7 lakhs, it's better for you in the new regime. But I would still say that anyone who's doing it, you should do your calculations, because your deductions remain the key part.
No, absolutely, absolutely. We've already given that caveat a few times that do your own math. But, I want to understand this, Ms. Kasturi Rangan, from a practical point of view. Which section of income actually uses all of those deductions? So a salaried employee and your contribution to Provident Fund, to PF, also comes under Section 80C. Even if you don't have a home loan, your HRA, etc., your medical expenses, are these the kind of people, or this set of people, the ones who anyway quite easily use the exemptions? It's not difficult to use up these exemptions, right?
I would agree with you, and I would say that, say, up to 7.5, if I'm salaried, I can blindly say that up till 7.5, under the new regime, I would not pay tax, because I would get a 50,000 of standard deduction, and I anyway get a 87A rebate. So I don't even have to think if I am up to 7.5 lakh of income. And beyond that, I would say those in the range of, say, up to 10 to 15 lakh, and especially the younger generation, possibly would not be incurring the HRA and so on. And they may not even be inclined to keep too much of savings because they are willing to make their own bets, invest in mutual funds or in equity without really looking at what is provided under ATC and so on. They would like to be masters of their own money, and they may not really want to keep the kind of documentation that is called for under this old regime. So for them, clearly the new tax regime makes a lot of sense. Many of them, we've also seen that they don't want to contribute to Provident Fund on their entire basic salary. They would want to limit it to either to the statutory wage ceiling of 15,000, or if they have a basic salary more than that, may even opt out of the PF regime. That is another trend that we are seeing among the youngsters. So I would say for those up to 15 lakh, they may possibly want to go under the new tax regime if their intention is that I don't want to be burdened, or my savings need not be driven by what the government no determines. But beyond that, I would say as people settle further in life and their income, the take home income goes up, they would really want to save for the retirals. The Provident Fund is indeed an attractive way because the contribution to PF, remember, the employer contribution is still not taxable. So that is a double benefit because it's a triple E scheme, despite all that marginal taxation that the government has introduced in the past couple of years' budget. So I think beyond the 15 lakhs and so on, employees tend to go under the old tax regime because they would want to invest into safer bets. They would want to avail the tax exemptions which are available there. HRA and Arnav talked about ATC, ATD, the NPS and so on. But if we add up HRA, LTA and so on, the difference can even go up. So I would say anybody over 15 lakhs would definitely need to evaluate. So long as you're less than 5 crore, I would say that the old tax regime is likely to look more attractive to them. And I'm a little surprised that the government looked at making this attractive for those earning more than 5 crores, but really did not look at the other levels of surcharge, where a similar slashing down of the surcharge could have made it more attractive for them as well.
I wanted to come to you on that because between 15 lakhs and 5 crores is a huge chasm, and you are taxing people at 15 lakh rupees income, the same in old and new tax regime, which is about 30%. That works out to what? About 1,25,000 there, on per month. In this day and age, with this level of inflation, post-tax, does that deserve to be taxed at 30%? I would like Ms. Kasturi Rangan, your view on that, and whether, all of this which we're talking about since yesterday, like a huge benefit for the middle class salaried income taxpayer, would have accrued better if there was a bit of relief there.
See, and I would like to compare the tax regime that the government introduced for the corporate. What did the government do? They did away with the exemptions and deductions, and they said you would be taxed at 25%. Whereas for individuals, we're still taxing them at 25 plus all this surcharge, even at the new 25%, we're still taxing them at 39%. So is that not an area where the government should have given a dip in tax rates? I definitely believe yes. I believe that has been a miss.
In terms of, at the end of the day, moving away from exemptions, and now, we've sort of broken it down pretty clearly for our viewers. So let's move to the bigger picture question over here. And Arnav, I'll come to you with this question. In terms of the intent of moving away from exemptions, easing tax burden on the middle class India, has that really been achieved with this new tax regime?
So, if you are just looking at simplifying the tax structure, the Income Tax Act remains one of the most complex things that you will come across. So that is one thing. Second is that, see, in terms of reducing the various exemptions and deductions which are there, now that has to be accompanied by such a reduction in the rate that it becomes attractive. I mean, like it was pointed out that for corporates, the difference is huge. Now here, the first thing is that the new slabs which were initially introduced, these slabs are of 2.5 lakh rupees each. Now they have been expanded to 3 lakh rupees. Now, if you keep changing rates at just 3 lakh rupees, the final impact is not much. So, in the sense of trying to get people to come to the new tax regime, these incentives, according to me, are not enough. And even the maths shows that anyone who's planning smartly with a slightly higher income is not going to come to the new tax regime. So that part is gone. The other thing is, in terms of what is the government trying to achieve, according to me, see, the government is trying to bring in this new structure, but at the same time not lose a lot of income. Because if you see the income tax statistics, the lower income band is a very huge chunk of the taxpayers. So anyways, you have a very small base paying tax. Out of that, there are very few people who actually pay the bulk of the tax. And this is the entire range where this old tax regime still remains attractive. So you have a lower income slab, which can be up to 5 lakh, 7 lakh, where a huge chunk of the taxpayers or tax filers are there, but they're not paying too much of tax. So the finance ministry can also make it look politically good that you are giving a large amount of benefit to a large number of people, but they're actually not losing too much in taxes. See, if you give this kind of benefit to those who are earning about 10 lakh and above, then you will see a sharp impact in terms of the tax collection, because the move away from the old regime to the new regime with a significantly lower tax structure is going to be huge in terms of revenue. So that is also, I think, which has been taken care of, because even after all these things, the finance minister is still projecting a loss of revenue of just 35,000 crores. So which also gives an indication that not many people, and this is under the assumption that a lot of people will switch, but a lot who actually pay a lot of tax might not switch.
Yeah, so it seems like a bit cosmetic at the end of the day. And yes, it does take some time to actually figure out the fine print and what can change and what cannot change. I want to come to another sort of aspect of this entire debate. And Ms. Kasturi Rangan, let me come to you on that. What the purpose of these exemptions were in the first place and why it made its way into our taxation structure. And it seemed to be to encourage people to do certain things with their money, build a nest egg for their retirement, buffer up their savings for old age, their pensions, incentivize buying a house for yourself, so on and so forth. Because there are very specific items which are exempted, certain kinds of insurance policies, certain kinds of savings, etc. What about that aspect of it, where the new tax regime seems to say that I'm not going to come and tell you what to do with your money, whether you want to save it in Provident Fund or you want to blow it up on a new phone, that's up to you. So in terms of the way Indians save and prepare for the future, how do you look at these two different approaches? You're on mute, ma'am.
So I would look at it very clearly that with the introduction of the new tax regime, the message from the government seems to be that your investment decision is yours. Please don't make the tax regime drive this. But over a period of time, we as Indians, I think, have really got used to a tax regime driving our. It's not only the taxation on the what you get out of it, but even for the investment. So, for instance, you look at the Provident Fund. It is one of the very attractive tax regime, tax schemes, tax beneficial schemes, because the contribution is exempt, the earnings are exempt at the point of withdrawal. Again, if you put in more than 5 years, it is exempt. And why did we do all this? Because as a social security measure, these were very few limited retirement benefits that India as a country had for the organized sector. So traditionally, it really made sense for the government to give these kind of benefits so that people are encouraged to save and we become a little more socially secure country. But I think with the introduction of NPS, which is more market linked, and the government has come out for the unorganized sector with a lot of other pension schemes, the Atal Pension Yojana is there again for the smaller earners. There are many schemes which the government has come in, and I think they are now trying to go to a market linked kind of scenario. So yes, there is going to be a dip in savings possibly because not many people are going to be willing to keep the paperwork. But then I would say that the government has also done a little bit on that side by, say, increasing the limit, say, for senior citizens. They've increased the the limit under the senior citizen savings scheme from 15 to 30 lakhs. Similarly, the monthly income scheme, the limits have been increased from 4.5 to 9 lakhs, and if it is a joint, up to 15 lakhs. There is this Mahila Saman saving scheme which has been introduced for 2 lakhs. So there are some areas where the government has introduced certain schemes. They may not have tax benefits necessarily, but the limits have been increased. So maybe some of the investments, small savings will still go into there. So the overall government savings, the small savings in a way, see the PPFs and the post office savings schemes are in a way funding the government infrastructure to some extent. And there is some amount of balancing there is what I would like to believe, but we would need to wait and watch. My key message would be that we as Indians may need to start thinking, saying that if I'm making an investment in insurance, if I'm making a decision for life insurance or medical cover, should that be driven by tax or should that be driven by my need for a coverage? And I think we should start moving towards the need,
I think
irrespective of what the tax law says.
That's an interesting look, and the way insurance premiums above 5 lakh rupees for certain schemes have been disincentivized is also a push in that direction. You invest because you want to invest. Don't invest because you save tax. Arnav, where do you stand on this? Do people need to, get that nudge, that lollipop to invest, saying that "आप invest करो तो कम से कम tax बचेगा"?
No, so there are two things here. One is that one has to distinguish between savings and investment, because people are good at savings. They will put money aside, but not necessarily invest it wisely. So one has to make that distinction, because this is what exactly happens when people just put tax as a priority while they are trying to save tax. Because what happens there is that money goes to areas which are inefficient in meeting long-term goals. Like, for example, say you put money in a traditional insurance plan. Chances are that at the end of the period, you will end up with a return of 3-4%, and at the same time you will not get the insurance cover which you actually need. So you are left, in a sense, nowhere or somewhere in between, which doesn't meet any of your needs. So the other thing is that now you might actually have two sections, one which is very diligent in investing and one which has virtually given up this whole idea of investing and is more interested in spending. So because, see, traditionally slightly older people, they already have so many options to invest. They have a habit of investing. They might put money away and still keep investing, but there might be an entire new generation of people who, one, have not had such a big experience of investing. Now with no tax benefits also, they might not have a need of investing unless they are very disciplined and diligent in going or investing towards a goal. So that category, which will have, say, more liquid money in their hands because of a lower tax, they might just spend it out, but the consequences of this could come far later. So one cannot club everyone together, but this is likely that there is going to be a large section of people who will need to be very, very disciplined, because unless there is this kind of push, some might not invest at all.
Does the government have the job of forcing people to make prudent decisions? Or if you decide not to invest, beyond the point, you bear the consequences. That's really the deeper issue that comes out of this. Does the state have to play nanny to your investment decisions? But nevertheless, for today, for now, before you make a decision of new or old, look at your math, look at your habits, look at where you save, look at where you invest, and yes, do call up your CA and figure out what works best for you. There's no easy answer. Thank you so much, Arnav Pandya and Saraswati Kasturirangan, for joining us on the lead story this evening.